Next guest says the market has backed the Fed into a corner and ultimately won't like the outcome. For more on how he's positioning, let's bring in Michael Landsberg. He's CIO at Landsberg Bennett Private Wealth Management. Which corner, Michael? Welcome.
Good afternoon. I actually agree a lot with Rick said. I think we're positioning it for what we think is going to happen, not what I'd like to have happen. And I think we're going to see 25 basis points, but I think the market has gotten into this 50. We're going to have 50, and I think they're going to be disappointed. 50 really doesn't give us a lot of room here, because what will happen is people are going to say, what has the Fed been not telling us the whole time? 50 is typically an emergency cut. And I'm not sure why we would get that now, given the data that we're seeing out there, stock market at all-time highs. I just don't see it.
I am scratching my head a little bit, because first we had the retail sales report, which was better than feared. Then we had the market increasing the chance of a 50 basis point cut. I say, okay, maybe they're just reading the tea leaves of what they think is going on in the press. Fine. I don't really get it. Then I see stocks selling off as those 50 odds go higher. And now I really don't understand. Maybe you can explain.
Yeah, unfortunately, I think there's a little bit of a scenario. It seems like when CPI was going to come out, the market rallied. Somebody must have got the news ahead of time. I fear this is the same thing. It seems like when there's a big macro event, somebody gets the information a little bit earlier and the markets start to move. So I'm not sure why that's the case, but it seems that the last couple of prints we've got, it seems like some other folks have gotten it a little early, and markets have made huge moves kind of, in before the actual data comes out. I hate to say that, but that's at least what it looks like the last couple of times.
Listen, I wasn't watching the tick by tick. I'll take your word for it. Obviously, if that's true, I'm sure we're going to hear more about it at some point. I just meant after the fact. I meant at 9, we've seen stocks turn lower throughout the morning as we've had a chance to digest the fact that consumer spending is still on track, and we might get a half-point cut, and somehow they're upset with this outcome.
Well, I think it gets back to, if it's really a 50 basis point cut and it's normally an emergency type move, what is the Fed not telling us? Is labor worse than expected? I mean, are there some things out there that they're seeing that we're not knowing about? And that's, I think, what the concern ultimately is. If 25 is more orderly, that's something that we can get our heads around. At 50, what does that mean? Is there something that's kind of out there that we don't know about, a little bit of the tip of the iceberg, and we're going to run into something 3-6 months down the road that the Fed sees that the rest of the market isn't seeing? I think that's the concern.
Yeah, if they do 50, I'm saying the beige book becomes a top-tier indicator once again, because that's the one that seems out of step with the others and kind of telling us that things are not so rosy. Listen, I don't know if you have small caps in your portfolio. I mean, Arthur, Gallagher, Bell, Constellation, these seem to me like larger cap stocks. But we have to talk about the Russell's outperformance. It's happening today. It's been happening on a 1-month basis. On a 3-year basis, the Russell 2000 is now up almost 10%, while the NASDAQ is negative. So even as I'm making hay of the stock market's weakness this morning, actually, that's not true of every part of the stock market. Small caps seem like they're suddenly the place to be.
Well, and small caps haven't been a place to be for like 3.5 years. So we have a little bit of a small cap exposure. I think the issue is when you look at the index has so many companies that aren't profitable. It's really a place to be a stock picker. Own a portfolio that owns some names. I would consider Bell Ring Brands to be a small cap name. It's a $7 billion market cap. It's in that small mid space. Yeah. And they've got a good story. Obviously, they're a play on the GLP. But I think you've got to look at where we've been. Small caps have underperformed for such a long period of time. Making their highs back in November of 2021. We're finally starting to see some life here, but I'm more of a fan. I'd like to see them have some outperformance more before I'd go broadly in a small cap. But I think you want to be defensive in this market. And obviously, if rates continue lower, that should be good for small caps. But I think in the large cap space, you want to be a little bit more defensive. Defensive has worked for the last 2 months. We think it's going to work in a lowering rate environment.
I love it. Just quickly before you go, you said Bell Ring is a GLP-1 play. Aren't they the maker of the protein drinks?
Absolutely. And we know the number one way you lose weight is to lose muscle mass. And so when you're taking Ozempic and Mounjaro, you're losing weight because you're not losing fat a lot, you're losing muscle. Oh. And ready to drink protein is a way for us to be able to play that, to be able to get more protein in people. Protein builds muscle. We think it's a way that's got a lot of legs as more and more adoption of GLP-1 drugs gets in there. We think Bell Ring's a very, very big winner in a beneficial scenario given GLP's expansion.
So I did not realize that you have to replace that protein, that build that muscle even as you're losing. And they were the original Power Bar brand. Anyway, just a fun side story. Yeah. Michael, thanks. We appreciate your time. And I guess the last thing I'd ask you is, are you positioning then for 25 or 50? You think these stock picks are going to do fine either way?
I think, overall positioning, we think you're in an environment, rates are going lower. You want to be, overweight gold. You want to be overweight some of the defensive names. We like insurance as well because we still think inflation's not going away. But utilities, real estate, I think those are going to be good areas to be there, as well as companies that have pricing power. Last month's CPI, The two big things were insurance was up 15% year over year, and drinks were up 18% year over year. That's Bellring, and that also could be Constellation, which is a name that's in the beer space. We don't see that inflation going down, and we want to be on the side that there still is inflation and pricing power.
All right, we'll leave it there. Thank you for your time. Michael Landsberg, appreciate it, from Landsberg Bennett.